Hi everyone, Nick here. I wanted to do a few minutes, like a checkpoint of where the markets are and where sentiment is and where perception is. So today is the 23rd of February, and I've been debating in the chat room as to with traders, and I'm getting feedback and questions that tell me that there's some confusion there. There are opinions that are they hate the rally, and I feel like they want to short it. And the first red day, they want to short it. And here are my thoughts. It's unbiased. I'm not the toot kind of a guy, but I'm just trading levels and realities in front of me. We're looking at the S&P, the SPY. It's a 2-hour chart. Today, the day started extremely bad. The NASDAQ was down 3% at one point. And the bulls bought the dip, and the S&P closed green. The Dow closed green. The small caps closed well off the lows, and I didn't look at the NASDAQ. The NASDAQ closed down 0.3%. It was down 3% at one point. 3%. It closed 0.3%. So just to give you an idea, Tesla had a $100 span. NEO had from 41.66 to 49 span throughout the day. So it was a violent day. But my point is, I don't change. They say don't fight the tape, meaning whatever is going on in the charts, don't fight it, because even if you're right, it doesn't matter. I don't fight the tape, and so far the bulls are in charge, and they will continue to be in charge. And the other one is don't fight the Fed, the insane Fed. I disagree with their actions, but they're there. The only way I would dare to challenge them is if I see reason to think that their hands are going to get tied legally, and they will, but not yet. So until those two things happen, or until the actual price action changes to where it tells me, hey, the bulls are not in charge anymore, shorting the markets is wrong. What's right is to buy the dips, and today was the biggest dip in a while, therefore they bought the dip. Period. End of story. I'll tell you, speaking of stories, I was debating, I was having discussions about a month ago, 20 days ago, somewhere around here, when the S&P was filling a gap somewhere, and it was 383. Now I lost there somewhere. Okay, this gap right here. And someone asked me, so where's the gap fill level? And I said 383 dot whatever, 20 cents or 70 or whatever. And that was in early February, right there. So this was the zone in contention today. Look at this candle. This is a 2-hour candle. In the span of 2 hours, they opened gap down. They tried to rally a little bit, and then they fell apart like crazy. They absolutely fell apart to 380, and then came back and they said, oh, you know what? We have no idea. Let's just decide the next 2 hours. And here are the next 2 hours. Again, a refusal of the bottom. And then they closed green. And then they said, let's go to the next 2 hours. They opened here, they closed here. So the day started out horrific, but ended up well. Now, I've been saying I'm watching for control. Now, what happens when they hit resistance, and they have resistance up here? I don't have my drawings. I should have lines. So, okay, so I haven't drawn them yet, but there should be resistance up there. Supports have held, and they're trading around pivot zones. So this was the neckline, and now they're holding it. Right, this was the breakout. Now they bounced off of it. There's an open gap here. Not every gap gets closed, but even if they do, the behavior will be to buy the dip until that stops working. I don't anticipate that this is the big one. I don't short like this is the big one. I'm only using one chart for that because it's clear. So what I want to see is what happens in the price action on the bounce. That's how you draw negative necklines, potentially bad necklines. So this was a line to pay attention to, right? That's where the problem happened at the open. So now they're bouncing. There's resistance at it. People that were stuck, resistance here and here. And that's an all-time high, by the way. So this is not a bad shaped market. So what happens if they go here and let's say they beat this one and they stall on this one? How far down do they retest? Sorry about that. Let's move it this way. You don't want to come back down and retest this one because now you would have some sort of a bearish pattern. an inverse cup and handle, whatever you call it, two humps, a camel, a puking camel, whatever. It's a neckline you don't want to retest. This is supportive. I'd be surprised to see lose anytime soon based on this time frame. It's a lot of muck to go through. The bears will have to work hard. The bears will need help to go through this. They will need help. They could, but they will need help. Don't know where it comes from. We don't know. We've never seen corrections coming, right? If you think back to 2008, I bet you anything, nobody here watching this video saw it coming. Everybody thought the assumption at the time, the problem in 2008, the only assumption that broke is that home values were fine. And they were not. They were all lies. So loans can pass. And then when you take the house of cards collapses, when you take one card out, the assumption that held everything together. In 1999, it was a little different, but the same thing. The assumption went away and collapsed. Nobody saw it coming. People thought it was too far, but it lasted months and months. So I can't short until the behavior changes. How do I see behavior changes? Lower highs that sustain themselves. Lower highs all by themselves are not bad, but when they get married up with levels that need to hold, and then the price action gets pinched, and then the decision has to be made: bounce and get out of this lower high trend, or fall to the next battle zone. And if that repeats and the battle zones go to the bears more often, then people like ARK would lose their guts to buy the dip and every day saying, oh, I'm buying 1 million shares of this and 1 million shares of that. That behavior will change, but not overnight. So until the behavior changes in the chart, there's no way I should short it. I shouldn't chase it big time, and I should have protection if I need it. I'll show you something. The daily chart on the S&P. This is not a bearish chart. This is a chart, regardless of what this is. The bulls are in complete control. And, oh, interesting. Okay, so this is today's candle right there. Weeks ago, last year, this was a rogue candle that came out of nowhere. That day, I said to friends, mark that. We're going there. 378. Out of nowhere, we had one flash 378 print out of nowhere. I believe it was a mistake. They didn't mean to show us where they wanted to go, but here we are. And if you look right, it's played a big role right here. Exactly the same one. And this is pretty darn close. So this is where I would buy the dip. I would buy the dip until the dip, until these battles I just spoke of on lower time frames start going in favor of the bears. So far has not happened. Same with the IWM. This is an even more crazier ticker. But you can see how they are buying the dip. Right or wrong, doesn't matter. Am I in it to make money or am I in it to be right? So I shouldn't start shorting just because we're so high. It's hard. I would lose money. To short, I have to sell stock that I don't own. I would never do that. That's how people went bankrupt that did that to GME out of the blue. Or I should buy puts or put spreads. And these, look, if anybody who bought puts anywhere, nobody made money at it, unless you're extremely lucky. If I wanted to sell call spreads, that could work. So the way I would short, if I wanted to short, I would go out in time, sell a call spread up here somewhere. So let them rally to get up here. I wouldn't sell naked calls ever, especially not in indices. Those are rigged instruments. No way. So I would sell a call spread, collect money, and if I'm right, that money is mine. If I'm wrong, I could suffer some losses maybe down the line if they go to 250 or 260. Not to give anybody a specific plan of action, but that's what I would do. The other way, I would protect my assets. Protect. The easiest way to protect. I'm going to get so much pushback on this one. I cannot believe it's so hard to convince people. I don't get it. Okay. One more time. This is the VIX. I'm going to go to a weekly. So the VIX is the fear factor that's actually tangible. It's priced off of the options prices. So when markets freak out, option prices go through the roof, and the VIX follows. So it's like chicken egg. You think the VIX is leading everything, but you can't say no, it's not. But mathematically, I'm told that it's calculated off the options prices, so it's us freaking out that freaks out the VIX, but I can't show you that. So there's no leading indicator there. I can tell you for emphatic truth, the average before this pandemic started, the average for the VIX was 16, lifetime average throughout its life. Look how stable it is, right? The lifetime average, I wish this draws an average, is 16. So for a year, it hasn't traded within 25% of that. You grasp what's going on? The VIX has not traded within 25% of a lifetime average. That's how far. So basically, this whole year is an outlier, basically. An outlier is rogue values out of the blue, up or down, away from reality, right? Like this one. It basically, this whole area for a year, so the floor is solid in the VIX until it's not. But for now, the only way I would protect myself, and I've been saying this for weeks, and if I did it day one, I haven't lost anything. In fact, I'm up on my insurance. So if I bought calls at the money or near the money a few weeks ago, before the first correction, which is when I said to do it, the values of those calls held strong. And if I'm looking at the VIX calls that I bought as a trade and analyze it as a trade, I'm making a mistake, because I'm going to say it again using the insurance on cars. I don't look at my expense on car insurance as, hey, did it make me money? Because its job literally is to lose money, so I don't crash my car, right? It's just in case I crash my car, I want it to come to work. But if I don't crash my car, its job is to die. That's the insurance. So why are we so broken up against, quote, losing money on insurance, which in this case we are not? So like today, if somebody bought VIX a week ago and saying, oh, this Nick guy told me it's a good idea, I'm down $50 on a contract. Well, today you're even or green. So it's like insurance that was free for a week. And if it's not free, it's really cheap. If you bought puts, you didn't make anything. So unless you nailed the put exit right now, today, at the bottom of one tick today. So the VIX is a good way if somebody wants to protect assets. It only works when the poop hits the fan. Then it goes ballistic. And then it pays offsets losses. If I wanted to short markets right now, I would use the VIX. I would always have calls in the VIX. I may lose a little bit here and there, but that's how I would do it. If I wanted to hold something, if I wanted to short markets outright, I would time my entries in something violent like the UVIXY. The UVIXY or the VXX. These are not good holds. Look at their charts. They're down, 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 down. But they're overnight, they work very well. So somebody that bought the UVIXY yesterday did very well today. But they won't do well if they held them. If you didn't book them, they're gone. So the UVIXY, if you're lucky, or if you know how to read charts and you can tell that there was something coming overnight, then that's the instrument. But if I wanted to kind of like, hey, I know if a crash is coming in the next month, let me buy some calls in the VIX. I go out in time and I would buy calls in the VIX. This is not a call to short the markets because we don't have proof of such thing coming. It could happen any day, but that's a black swan, and that's the story of all markets at any point in time. Okay, this is a little bit longer than I wanted, but I think it's pretty important. So hopefully that helps people zoom out and get an objective opinion as to what the heck's going on with this crazy market. It is bonkers. I give you that, but I can reduce it to ticks and charts and lines to take out the emotions. Instinctively, I want to be bearish because everybody's so bullish, but not to the point where I want to lose money doing so. All right, Nick signing out.